Okay, let's do a little. Let me actually send to this. Let's do a little study session on gold. I literally talked about this in my last video on how I was looking into gold, and I was doing a little presentation while I was studying so that I could show you guys what I learned. I learned a lot of this before I traded gold, but then like midway through one of my analysis videos, I was doing like some type of analysis on gold. I was like, damn, I should really like make a video on this because I need to revise it myself because I need to be like this when it comes to like reciting this stuff. And I'm not there yet, but I have like a good idea. So I did a little bit of another deep dive, a little bit of revision, and I thought that I'd make a little video on it. So this is basically just a quick guide on how to trade gold. This isn't anything to do with strategies. This is literally just understanding gold and gold as an instrument. Because I've been very focused on gold for trading. Again, disclaimer, I'm a beginner. I'm a beginner trader. I haven't been trading forever. I'm not a full-time trader. I still work. But I decided that the first instrument that I would trade on and the only instrument that I would trade on and try and become profitable on first would be gold. And yeah, I thought that I'd do like a little deep dive because I know that a lot of people say that gold is hard to trade. And I feel like if I like, because I'm doing a little bit of a deep dive on like gold as an instrument, it's actually helped me a lot. Like when news comes out, I know what price action to expect. And when it comes to placing my stop losses and my take profits, I know where to place them and where it's appropriate, so that you don't get stopped out, because that's something else that I discovered, which I don't know if I included it in here, but I'm going to say it now. Gold makes really big wicks apparently, and can tend to like wick you out of your positions. That's just what I've heard from people that trade gold and from articles and stuff like that. But anyway, let me start before I like just continue yapping away. So there's different types of instruments of gold. So there's like your standard like forex one, which you'll see most people trade. There's a futures version, and there's ETFs, which is obviously exchange traded funds. I think that's right. I have not done research on investing in forever. I took all of my money out of investments and put it into trading, which some people might say that's a bad idea, but I still have savings, so it should be okay. But anyway, um, and you also have gold spot. So gold spot is kind of like, it's I guess similar to futures, but you're buying it on the spot, whereas gold futures you're buying a contract in order to exchange it in the future. But I mean, when it comes to actually just understanding it, you're basically, if you're trading gold spot, I'm pretty sure that you're just buying like the ounces or a percentage of the ounce. It could be lot sizes. I can't remember. I'm not gonna lie, but I know that these are the things that you can trade gold on. Um, so you're either taking lot sizes or actual ounces, and then with gold futures, you're trading your micros, your minis, and your contracts. And then with forex, you're doing lot sizes, so it'd be like 0.01. And the forex futures and the spots, they move pretty much the same, but the ETFs, they move differently, because the ETFs are actually companies that mine gold typically. Don't quote me on that, but also, this is not financial advice. This is not financial advice. If you want personal advice and stuff, go to a financial advisor or something. I think I'm supposed to say that in these videos. I don't know, but this is not financial advice. This is just a little study session. Like, this is just what I learned from studying for the last few hours on gold. And yeah. So anyway, so gold is one of the most traded metals. It moves pretty nicely, in my opinion. It's a safe haven asset, which is really, really important to understand when you're trading gold. Like, genuinely, it's helped me understand why gold moves the way it moves so much. Like, gold is on a bull run at the moment, and it's because of all the stuff that's going on with Trump and China, all the stuff that's going on with rate cuts, literally with so much going on in the economy right now, especially with the US. That's why gold has kind of been on this bull run at the moment, and I've kind of understood that by knowing that it's a safe haven asset. Now, don't take my word for it, because like I haven't been investing and stuff for years, so I don't want to like give you guys completely the wrong information, but just from what I've analyzed and what I've seen, I've kind of taken that, okay, gold is a safe haven asset. it's probably because of everything that's going on with China. And I also listened to podcasts that told me that as well. And then it's also used to hedge against risk. So when you're obviously making an investment portfolio, you have like your S&P 500, your NASDAQ, your what are more? I don't know. Usually you'll do like individual stocks, companies that you believe that are gonna perform really well. You'll chuck a bank in there, like you'll diversify so that if the US collapse, you still have money in the investment portfolio, and your money is still hopefully net positive. So it's used to hedge against risk because gold holds value through things like inflation and in just highly volatile areas, which we'll go through later on. I apologize. Like, I feel like I've done so many different sizes throughout this little document. Okay, so gold and news. Gold reacts interestingly to news. I'm going to go through this bit first because I feel like this is the easiest, and then we'll get into all of this. So the gold and the US dollar work inversely. This video right here, amazing. Like this diagram that she shows you, she's basically showing you the inverse relationship between gold and the US dollar. I highly recommend you guys watch that video. It is really good, and I think she goes through a few strategies at the end. Personally, I wouldn't choose those strategies, but I think what she actually says about gold and how it inversely has its relationship with the US is really good. But this is what was really interesting. I didn't really know. Just because the stock falls doesn't mean that gold will rise, because obviously stocks, like as a whole, is like a good representation of the economy, but there's obviously more to it. So just because a stock falls doesn't mean that gold is going to rise, because a stock fall is not always to do with the economy and not always to do with the US dollar. Sometimes it's just to do with like earnings reports and things like that. And okay, that's for later on. So these are the different news red folders that come out. These aren't all of them, but I did the main ones that I've noticed that will move price a lot. There's other ones like retail sales and stuff like that, which I don't really see gold reacting to very well. So anyway, I'll go through these. So we have the CPI. So if it's higher than expectations, that's going to strengthen the US dollar, which then means that gold will fall because they've got that inverse relationship. And then increased rate hike expectations is what I said. The only thing that confuses me about this personally is the whole terminology around rate hikes and what's called the other version of that. It confuses me sometimes, so I'm just gonna kind of avoid using those words, but I've got them in there. And I've got definitions, I'm pretty sure, later on in this little PowerPoint thing. And then lower than expected CPI means weakened US dollar, which means gold will rise. And now this won't always happen, but this is just kind of what the data is telling you that gold is going to do. But obviously gold can do whatever it wants to do. It just because it's like negative 0 whatever percent, like doesn't mean that gold is just all of a sudden going to like drop or like skyrocket. It's just not going to happen. But it can kind of just help you give like an indication. It will help with confluences when it comes to trading. It's helped me in the past, like be confident about getting into a trade when there's a red folder news that day. So NFP is US data for jobs. So if it's stronger job data, then the US dollar strengthens, which means there's no need to cut rates, which means gold drops. And then when there's weaker jobs data, it means the US is weaker, and that means gold can go higher because there's like rate cuts, inflation, and things like that. And I feel like job data has like a pretty big impact on gold, I'm not going to lie, just because it has a big impact on the economy and the way that the US and gold move together. That's the main reason why I feel like it has an impact. And then we obviously have the FOMC meetings, which decides on the rate cuts. So if it's a hawkish tone, rate hikes or no cuts, it means the US is strong, so gold drops. And then because it drops because people are taking their money out of gold and putting it into like stocks and things that can have a higher return. I think I got that right. And then a dovish tone is indicating rate cuts, which means that the US dollar is weaker and gold will rise because it again goes to be like a safe haven. And then we've got GDP rates, which is gross domestic product. I think I got that right. A higher GDP equals a stronger economy, which means gold will fall because people are going to be taking the money out of gold and putting it into things that will get them higher return on their investment. And then again, lower GDP, gold rises as a safe haven, because that just reflects badly on the economy. And okay, hawkish means that so say Powell's speaking and he's has like people are saying, oh, he was hawkish, whatever. I don't know the correct terminology, but it basically means that looking to fight inflation. So the US dollar is really strong, and gold is weaker. Did I say that right? Did I say that right? No, I feel like that's wrong because it literally says it here. Rate hikes or no cuts. Oh wait, no. Yeah, I did that right. Sorry, I did that right. And then if it's a dovish tone, then gold is stronger, which means it will usually rise because it's flagging a slowdown in the economy. And again, gold is a safe haven, so it retains value. It doesn't pay interest, which means that when the Feds cut rates, it's safer to be in gold. So, like, say that the Feds end up not cutting rates, for example, which I'm pretty sure if they don't cut rates, rate cuts or no cuts, the US is stronger and gold drops. But the thing is, if the rates do not get cut, it doesn't too much affect gold. Like, yes, it can affect its value, but gold still holds its value. But then, like, the reason why gold drops is because people want to move their money into things that will give them a higher return on their investment, if that makes sense. So yeah, it doesn't pay any interest, which is good, which means it's good to fight off inflation. This is just the things that I've like kind of taken together. I've put like 2 and 2 together like this whole time, and I've been trying to like work it out in my head. So if I say the wrong things, I apologize. Feel free to correct me in the comments. But again, this is a study session. I'm learning with you. But all of this information is information that I've gotten from trusted sources, and it's not just me giving you guys what I think. This is like actually like the research that I've done. Me speaking is just giving you what I think. But if you want to just pause and read, feel free. And then anyway, it holds its purchasing power during crises. So inflation, wars, and recessions, gold holds its purchasing power, compared to like the US dollar and things like that. And lucky last, which I think is like probably the most important, for traders, like for day traders and swing traders, gold can be very volatile around high impact news. We've probably all noticed that if you trade gold, it can be very volatile, especially when it comes to discrepancies within the US data. If the US data is pretty much the same or like very close to as expected, then gold doesn't move crazy. But when it's very off, which it has been recently, gold can move like crazy. And then it also works inversely with the DXY, which I had said or mentioned earlier in this video. It works very much inversely. I showed you guys a video that I would recommend you guys watch just so you can get the visual of the graph. But literally, if gold is moving like this, the DXY is moving like this. I don't know if I just did the same thing, but you get what I mean. I'm sure you get what I mean. And then it's interest rate sensitive. So if the rate hikes equals fall, rate cuts equals rise. So if they're cutting rates, am I getting that right? No, I can't remember. If they cut rates, that means that they're capping the rates. Hold on. Okay, I'm back and better than ever. I've got a few notes. So, rate hikes, which is when the rates continue to go up, is equals less borrowing power and a stronger USD. Okay, yep, and the rate cuts make borrowing cheaper. It's taking me a minute to wrap my head around this for some reason. I might just be slow, but it's very slow for me for some reason. But rate cuts means borrowing is cheaper, which is supposed to stimulate economic growth. So if everything's super expensive, like it has been, the Feds will cut rates so that people can borrow money. It's easier to get money, and then it means that people are going to more likely buy things, and that also makes it easier for companies as well, because companies will have it'll be easier to borrow money and to like lessen the amount that things are, if that makes sense. And then rate hikes means that there's less and less borrowing power. So as rates hike, as the rates hike, bro, the interest rates go up, which means that there is less borrowing power for people to buy things like houses and yada yada yada. But it indicates that there's a stronger USD because it means that people are buying more. People are, the economy is flourishing. Which is when they come in and they cut the rates because they're like, all right, this is too much, stop, let's rebalance, and then the cycle repeats. From what I've read and found out. But again, I'm slow. I might have to do an updated version of this in the future because I'm still trying to wrap my head around it all. However, knowing that gold is a safe haven has helped me so much, and knowing that it is inverse with the USD helps me read the news data so much. Anyway, on to the next. So gold has range bound behavior, so gold can often trade sideways until a major catalyst. We've definitely noticed this. So a few months ago, or like maybe even a month ago, before this big bull run, gold was literally just consolidating. It was trading directly in between a range on the daily charts, and I could see this from my weekly analysis if you guys want to watch that video. And yeah, I wasn't trading during that time. I think I might have been paper trading. But yeah, I didn't unfortunately get to experience trading through that range. But then yeah, once price broke out, it broke out and it was very, very volatile. And yeah, it's been just moving bullish since. So I guess that is a major thing that happens. I've actually noticed that, to be honest, like whenever something happens, like I've noticed that, okay, after it dies down, it will just consolidate until the next thing. And yeah, on to the next. So gold reacts strongly to fear and uncertainty, again, because it's a safe haven. So when things like war come out, when Trump tweets, don't even ask me about that. Don't even ask me about that because I'm not on Twitter, so I don't know. But when there's just uncertainty in the world, and I guess because Trump's president, I'm sure that has something to do with it. But I don't really know. I know that I think it reacts better to like NQ and ES, like him tweeting. But yeah, just when there's uncertainty around, like even like the rate cuts and things like that, gold can react really strongly. And gold often trends after breakout levels. I've very much noticed that when price breaks out, it will break out and it will continue that typically. And that's not saying that there's not going to be any retracements. I'm just saying that it just is trendy. So it's like forming higher highs and higher lows if it breaks up bullish. If it breaks down bearish, it's lower lows and lower highs. And I'm able to confidently say that because I've done back testing. So it's not just from my live market experience so far, it's from the back testing data that I've done previously. I can definitely test for that. Not financial advice though. It's not always going to continue on the breakout levels. It really just depends on your analysis. That's why I like to wait for the breakout so that I can have extra confidence when going into trades. And lucky last, always consider USD interest rates and risk sentiment in your analysis. Risk sentiment was really good. I had to Google this word separately to figure out what it meant, but it basically means like again, like the fear and uncertainty type of thing. So if there's any uncertainty in the market, people are more risk on or risk heavy, and they don't want to lose their money basically. So they'll take money out of stocks and put it into gold because it does hold its value. But then when it's more risky to hold gold than to invest in the US market, like say when the economy is looking really, really good, then people will take their money out of gold and put it into other things that have higher growth potential. But yeah, that's what I've learned so far. There's always more to learn, so if you guys think that there's any missing spots in this little study session, let me know, and I'd actually love to know, so that I can research it more because I trade gold and I love learning about gold as an instrument so I can build that intuition and that discretion, and I think it's working so far. But yeah, I hope you guys enjoyed this video. I hope you guys found some type of value. I apologize for my yapping and for my confusion here and there, but I'm learning like you guys, and I document my entire journey. If you're new, if you didn't kind of get the gist the whole way through, I document my entire journey. I document my trades, I document my morning analysis, my when I don't take a trade, my journaling, my weekly analysis, my studying sessions. I journal everything. We'll document everything and post it on this channel. But yeah, I'd love you to support and subscribe. And yeah, I'll see you guys later today when I tell you guys about my trading day. Bye.